Our company is named Ignite Shoes and CEOs are Aaron Balmer and Nidhi Patel. Our company has attempted to create a strategy delivering high-quality shoes at an affordable price to create a low-cost advantage in comparison to our rivals to produce profitability. Using low-cost inputs where we can drive down costs without sacrificing product quality is important. We wanted to be competitive in the global marketplace. While establishing a successful workplace environment for our employees, we wanted to maintain a high credit rating to meet or exceed investors' expectations. We implemented a best cost provider strategy, which is a mix of the other four strategies, including overall low-cost provider, broad differentiation, focused low cost, and focused differentiation strategy. We wanted to provide a price-conscious consumers with a product that is the best value for their money. The best cost provider strategy is a hybrid of differentiation and low cost provider. Ignite Shoes did not over differentiate our products, which would result in a high price product. Our company also did not want to provide such low cost that it compromised the quality of our product. Ignite Shoes could be doing better as far as stock prices. Our stock price just fell from $30 in year 10 to $5.08 in year 16. Our credit rating started off as a B and has gone up to A in year 16. Our total revenue has increased. We could also be increasing our return on equity and earnings per share. Ignite Shoes experiment with our product price from year 10 to year 16 in both the internet segment and in wholesale. For a wholesale segment, we started off with a price point at $48, and we eventually raised our price to $56.52 in year 16. However, we also offered more model availability when we raised our prices. Our prices were still below the industry average. In comparison to our competitors, our prices were below the industry average. As seen in chart, Ignite Shoes, our company-wide product prices in our wholesale segment were $4.52 below the industry average. Our prices were still below the industry average in our internet segment, being 50 cents below. There are several advantages to the best cost provider strategy in the shoe market. Product differentiation is definitely the norm. Mid-range products such as the products from Ignite Shoes show the company is aware of the economic conditions that would make our consumer budget conscious. Ignite Shoes offer a price that was below the industry average to give consumers an option that would not exceed their budget. Ignite Shoes shows the best cost provider strategy as a middle-of-the-road business strategy that was a hybrid of the other four generic competitive strategies. In particular, our wholesale price for our products was lower than the industry average. We did not provide the very best product, but however, we did deliver a better product for a decent price. There are several areas for improvement moving into the future with Ignite Shoes. The company needs to look more at the competition's numbers to determine how we should move forward in comparison. With looking at the competition, we need to be more competitive in the global market. We could decrease the price in some of our markets, reduce delivery times to enhance customer satisfaction, increase retail outlets in the global market, and spend more money on SEO and the internet segment. These changes should help make Ignite Shoes more competitive with our rivals.